Asian Deflation by www.forexconspiracyreport.com. The recent fall of the Chinese yuan has shocked the Forex world. The Chinese decision to let the yuan rise or fall according market forces was presented as an argument for adding the yuan to the world list of reserve currencies. However, China is seeing a worse than expected economic slowdown. Japan has let its currency fall in order to improve exports, including to China. The worldwide Forex race to the bottom threatens to bring on generalized Asian deflation as nations that trade with China strive to weaken their currencies in order to keep up with the Chinese yuan as it falls. What is deflation? Deflation is a general decline in prices. This is commonly brought on by a reduction in the supply of money or credit. Deflation can also be caused by a decrease in government, personal, or investment spending. The Japanese case. In the late 1980s, Japan seemed set to become the dominant economic power on the planet. Then a mountain of hidden bad loans came to light, and Japan entered a quarter century of deflation. It is only within the last couple of years that the new Japanese government has changed monetary policy by devaluing the yen and increasing imports. When governments seek to respond to an economic downturn with austerity measures, it often results in deflation, as was the case for a quarter of a century with Japan. The recent Japanese move to devalue the yen has hurt China, which is now responding. The concern is that other Asian trading partners of Japan and China will follow suit and devalue their currencies as well. The spread of Chinese currency devaluation. Albert Edwards in Bloomberg writes about a coming deflation ice age as deflation spreads in Asia and then to North America. China's currency devaluation took Albert Edwards a step closer to realizing his doomsday prediction. Deflation spreading from Asia to the US and Europe and sending economies crashing. Tumbling emerging market currencies will now accelerate their declines, curbing import costs in developed nations and triggering a broad drop in prices that will undermine economic growth, according to Edwards, the top-ranked global strategist at Societe Generale SA. Make no mistake, this is the start of something big, something ugly, Edwards wrote in a report on Wednesday. Edwards has long maintained a view he refers to as the Ice Age, when deflation will eventually cover the earth. China's surprise change to its currency regime this week takes investors one step closer to this outcome, Edwards said. It will eventually result in an emergency of similar magnitude to the collapse of Lehman Brothers Holdings Incorporated in 2008 and the ensuing global financial crisis, he said. The U.S. Federal Reserve has long planned to raise interest rates to control any movement towards inflation. That may not be necessary if Asian deflation moves across the Pacific. Intense price competition in deflationary times drives wages down and leads to unemployment. Debts become harder and harder to pay off as wages fall and the relative values of currencies rise, contrary to what China and others are trying to accomplish. The fact is that when a handful of nations manipulate their currencies, it can be a useful strategy. When everyone does, Asian deflation runs the risk of moving on to America and Europe and torpedoing the world economy. For more insights and useful information about trading foreign currencies, visit www.forexconspiracyreport.com.